Something's weighing heavy. Created too much pressure, this ain't healthy. We were all good, love was plenty.
Where you and I really are we right or we wrong, or have we gone too far? You know that I'm falling for you. Oh baby, I'm falling for you.
Bear with the music, I'm trying to figure out what playlist.
Is it trust, is it lust, or do I have to choose?
Let me know if you guys can hear me. I just want to confirm everything's working before we start off.
Oh baby, I'm falling for you.
Different kind. We were laughing through the pain. You were never once so vague. Cut the cord that kept us connected, blacking out the mirror where your light once reflected. All of the love from up above, we used to fit like a glove. I still think about the you that only exists in my brain. Nothing ever stays the same. Guess it's just a shame with no one to blame. Together in our prime, we were birds of a feather, different kind. We were laughing through the pain. You were never once so vague. Cut the cord that kept us connected, blacking out the mirror where your light once reflected. All of the love from up above, we used to fit like a glove. I still think about the you that only exists in my brain. Nothing ever stays the same. Guess it's just a shame with no one to blame.
Hey Nick, we'll just give it 15 minutes or so. We already got a bunch of people waiting.
Music going on.
Yeah, I'm trying to find the playlist that Neil uses. The one that I searched the same playlist name he said on Spotify, but it sounds a little different. But it'll make do.
Maybe you don't like talking too much about yourself.
Because I'm paranoid again, I'm landlocked in the middle of the sand as I watch it go past through the fingers on my hands. And you took the old route, can't make it out, terrified of living in a drought. How does that sound? Searching for another canteen, dry mouth, got another hand, fingers to my head and I'm out. But I don't want that, I keep holding on to the past, and the future's running me over. And I'm thinking about the end, what's it mean to you? And sometimes I watch the sand trickle out my shoes, and if I knew why, then there's something that I'll tell you, and at the same time, I just wanna see the new you. Holding on to me, well, something I think I need is running, go through my dreams. Oh, I choke, think I got a new heat stroke. Take me all the way back home, an oasis I don't know. Oh, and all of the things that I said in my life, I've been taking them back, and I'm still paralyzing myself. Alone.
Get jiggy with it. What? Get jiggy with it. What? Get jiggy with it. Get jiggy with it. Get jiggy with it. What? Get jiggy with it. What? Get jiggy with it. On your mark, wait, set, let's go. Dance, roll, bro. I know, you know, I go psycho with my new joint head. Just can't say it. Gotta get jiggy with it. That's it. Now, honey, come ride. DKNY, all up in my eye. You got a product, bad with a lot of stuff. Baby, give it to your friend. Let's spin. Everybody looking at me, dancing, kid. Wishing they was dancing, legit. Hit it with this handsome kid. City cigar right from Cuba Cabar. Just bite it. It's for the look. I don't light it. Feel way on hand, stay on play. Give it no jiggy, make it feel like foreplay. Yo, my cardio is infinite. Ha ha. Big wing style all in it. Get jiggy with 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 it. Don't stop, in the winter on I makes it hot, get jiggy with it. 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 Get jiggy with it.
Hey, what's with the countdown?
Jiggy with it. Get jiggy with it.
The countdown is off.
Yeah, I just kind of winged it. My music selection is suspect. I know everyone. Thanks for pointing that out. And we're about 2 minutes out. I'm not going to try to get these back.
What? Listen to this, David. Oh my gosh! What?
We're going to pause the music. I think that's probably a better choice.
David, am I live? Am I talking to them right now?
Numbers. Nick, do you want to start sharing your screen? Then that way.
Yes. Yeah. I'm reading. I'm blown away by the. This will stop screen sharing. Do you want to continue? I'm already sharing a screen apparently. Okay, there we go. All right. I'm up. It would be as long as you want it to be. No, I don't control the time. It's Harvey. Harvey, are you there?
Yeah, sorry, I was on mute. I was totally on mute. Okay, so I think everyone see Nick's screen? It should be the chart there.
Yeah, cool.
Yeah, perfect. Okay.
Can you hear me as well? Audio? Yeah.
Yes,
awesome.
is all around. Okay, perfect. Welcome.
Okay,
everyone to 1 p.m.
First of all, wait, I need to acknowledge a note from David. I was like warm and fuzzies. He said they have a great financial situation now because of them, whatever they learned from Benzinga here and us. That's great. Happy. Okay,
Awesome.
off to you.
Yeah, we hear tons of stories like that, and you know what? That's the reason why we do this. Benzinga is for the people, by the people, as everyone knows, and these educational segments are for you to understand how Nick trades, what he does, his strategies, his formulas, for you to ask him a question. And we'll have about an hour here. Nick will go through some concepts. We will have a Q&A at the end. We always get a ton of questions, and we try to answer as many as we can. Before we start, the one thing that we always like to do before these webinars is we like to get a pulse of where people are from. So drop in the chat, you know, where you're watching from. We typically hear countries and different cities
Miami,
all around the world.
Houston, India, Colombia. I know there's Kosovo already announced themselves. Italy. Whoa, too fast, too fast.
I love seeing
LA.
that.
San Francisco. My son was born there. DC, Singapore, man, Rio, Israel. I was
Sweden.
born in Lebanon, so close, share borders.
Wow,
Slovakia.
it's a fast chat today, Dick.
Oh my gosh. Alberta, I saw
Alrighty,
that.
guys, perfect. So we got the works, we got the whole world in here looking to learn about option trading.
Tejas,
So
Sweden.
alrighty, perfect. So
Amsterdam.
my recommendation, I'm going to stop talking. I'm just here to funnel over questions over to Nick.
Bangkok.
My recommendation for everyone is to have a notepad, have a piece of paper with your pen, get some questions ready, drop them in the chat at any point in time, and I'll relay them over to Nick. So I'm going to stop talking. Nick, I'll let you take the
North
floor
Pole.
and go into the presentation.
Okay, cool. All right, so it looks like options. We're interested in options. There are a lot of, I said, give me a 10 if you're completely new to options. So that's where I'm going to start. And then we can expand from there. So let's go to options. This is what an options table looks like. I usually use Apple because everybody knows it. I'm going to use June contract. Okay, so we have a whole bunch of 10s. I get it. The website for the charts was TradingView. They have a free version, and you can upgrade for paid versions, or like $15 a month or whatever. So, okay. So what are options? Somebody mentioned that they were a way to hedge. Yes, that's how it was. Way like in the early years. I think it's the 1800s, if not even earlier. So they started out as a way to hedge costs or hedge assets or hedge businesses. An easy way to think about it, like if you had a pizza shop and cheese is your biggest component, and it fluctuates in price, and then you needed somehow to limit that fluctuation. So you would go out, and there are people that would say, here, you pay me X for your cheese for the whole year, and I'll take care of the rest. So sometimes they make money, sometimes they lose money. So they manage it for you, and they make money off of it, clearly. So anyway, that's where they were created. But now they're just a beast. And somebody asked, does it work like investing or something, like comparing it to stocks? Basically, it is investing. It's just a method of investing. So everything starts with a thesis. So if you don't have homework and a thesis, then regardless of what you use to invest, you're winging it. So if you buy a stock and you make a lot of money and it was just pure luck, it was just pure luck. It's not an investment strategy. If you buy options and you do the same, so that would be the same outcome. What you need is a strategy. So why am I doing X? Why am I buying shares? Why am I selling shares? Why am I buying puts or calls? Or why am I selling puts or calls? It's all, why am I doing this barter deal here? Anything. It's give and take. All right. So with options, we'll start with the definition of options, and then I'll tell you what things that you absolutely must need. So first of all, it is they're contracts. Every option is a contract, and we have put options. This is this side. We have call options. This is that side. Okay. So the idea is, when you have a contract, usually it has a time limit. In this case, I chose June and 47 days on the clock. They expire. They have I think it's the 18th for June. So it's finite. It has a lifespan. So when somebody buys it, there's always also a seller on the other end. So this is the buyer. They're paying $1.20. The seller is collecting $1.20. So you hear it on CNBC, and they say things like, they are buying the so-and-so call or so-and-so put. Well, that's not correct, because there is a seller on the other end. So, and then I don't know the buyer. I don't know the seller. I don't want to presume who's smarter. The buyer thinks the seller's an idiot, and vice versa. And otherwise, why they would do what they were doing. So it's a push-pull between two parties. I'll tell you what it means to buy a put, and the easiest way is to visualize it from the buyer's perspective. Okay, so let's get out of here. So again, it's a contract. It has a time limit on it. And in this case, 47 days. And let's say I own shares of Apple and I'm worried for the next 47 days, sell in May and go away and all of that. And I want to protect myself. And if I have 100 shares, I want to protect my 100 shares, and I'm okay being losing until 120, but I want to guarantee myself to be out at 120. So the idea is that I would buy one put, and that would cover my 100 shares. What does that mean? So when I buy a put, I take control of my destiny here. I spend the money, and I can go to sleep, go fishing, knowing that if Apple goes to zero, I am guaranteed a sale at 120. I'm not obligated to do it, but I'm guaranteed. So if I wake up one day and it's at 115, I look at it and I say, you know what? Even though it's at 115, I don't want to sell my shares. I don't have to. I don't have to exercise my right to sell the shares. On the other hand, the person who sells me that put is on the hook, and they have to do what I say, the buyer. So when somebody sells a put, they are promising, they're on the hook from 120 on. At any point in time, the buyer of the put can exercise their right. And this is for 47 days because I just picked June. I could have picked May. I could have picked next week. I could have picked 2 years out. So it's for the term of this particular contract. This one is $1.20 for 47 days. And because it handles 100 shares, so the cost of it will be $120. So if I go to enter the order, you'll see a debit out of $120. Okay, so that would be or credit. Debit for the buyer, the person buying the insurance, a credit for the seller. Okay, so we have this contract open, and the buyer is controlling the action with what happens between these two parties. At any point in time, the buyer and the seller can leave it, and they would simply reverse so the buyer can sell the contract at any point in time for partial gains or partial losses. So how does this price move? So if Apple stock price falls, the value of this will grow. If you look at it, it gets higher the closer you get to current price. Current price is 131. So here, Apple is right here. So the value of the put up here is $400. But since I'm okay taking heat down to 120, it would only cost me $1.20 to buy that put down here. If I wanted to protect myself at 130, I have to spend $400, not $120. Okay, so that is on the put side. Now, I can pick any which one of those, and one contract will cover 100 shares. That's important. Therein lies the leverage. So it's no different than buying insurance on a car. So when I buy insurance on a car, it usually has a term limit. If I buy 1 year's worth of insurance, it's going to cost me more than just a week or 47 days. If I buy insurance to cover the car and all of its contents, it's going to cost me more. So here I'm saying the car's value is 120. Here I'm going to say, no, it's 130. So they're going to charge me more for 130. Okay, so somebody's asking what's the delta, and he's already confused. So somebody's asking what the delta is. No, let's not talk Greek yet. I want to explain the concept. Again, the concept is a put option is a contract between buyer and seller. The buyer of the put purchases it and controls the action thereafter. The seller of the put, no money leaves their account. In fact, money goes into their account at the time of sale. So who sells the put? Okay, so you own 100 shares of Apple and you're worried about it at 120. I do my homework and I say, you know what? I would love to own Apple at 120. I tell you what, I'll sell you the put And at any point in time, in 47 days, you want to sell your shares at 120, I'm a buyer. So now you, who has the shares, can go to sleep knowing that you have me, a legal buyer, at 120. So I collect money for me for taking the risk off your shoulders at 120. And what happens if nothing happens? If price doesn't fall and I don't, the owner of the shares doesn't act, then the seller of the put made money out of thin air. So if I'm the seller, if I want to buy Apple shares at 120, I would sell a 120 put. That's a big if. And then for that, money goes into my account, 120 bucks. And what happens if Apple doesn't fall and I don't get put the stock? Then I made $120 out of thin air. No money left my account. So that is the give and take. One person is buying insurance, the other person is selling so they can get into the stock at that opportunity. So you think it's a disaster at 120, somebody else out there thinks it's a bargain at 120, therefore they would sell you that put. Okay, so that is the put concept. It's insurance for the buyer, and the other person, it's a way to get in. Now, people use them to trade and not intending to cover any stock or not intending to buy any stock, and that's fine. And that's what I do. So, but the concept is still the same. The mechanics are still the same. So what drives the value? Time is a very important element. If you take classes, they call it theta. It's just time. Okay, we're speaking English here. No need for Greek. So it is just the time value. Why is that important? Because if I have 47 days for a price to unfold, so you have to imagine that the value of that contract will drop drastically if suddenly the time got cut in half. So in that case, you would, time is a critical component of it. Even if you leave everything else the same, just time ticking devalues the contract. That's what I'm trying to say. So if nothing happens, no price movements or anything, just tick tock, 46 days, 45 days, 44 days, every day that ticks by, the value of this contract drops. Okay. And, there are other Greek terms that would tell you by how much, but it's almost useless to use them for that purpose because it's a theoretical concept. It will never happen the way they say it. So I use them in other ways to set my risk at a proper level and manage it. And I'll get to that in a little bit. Okay, so the contract has a time element to it, and it's really important. So first we established that it's a contract. There's a buyer, there is a seller, the puts. And the buyer of the put has the right to sell the stock if they own stock. It's like buying insurance. And there's a time limit, and time is important. Price action is important. It is, if the stock price falls, then the put values grow. And that's because price is headed into them, and sometimes fast. Another reason why put values grow is just simply the VIX exploding. If you've heard of the fear factor, the fear gauge, VIX, VIX, if it's priced off of the options. So if people get nervous, the option prices they balloon. And it manifests itself in a high VIX, a spike in the VIX. Like Friday, the VIX popped 6%. So if nothing happened, the options prices would have increased just from that. That's a representation of that, actually. So that's the put side. Okay, so on the call side, why would anybody buy a call option? So we know that the put option is buying insurance. So what is the call option? Okay, so if you wanted to own to own stock in Apple, but you're afraid for the next couple of months that it's just too much money to put on the risk, on the table. So 100 shares times $130 a share, that's a pile of money. What if you could just lock your price? You can lock your price by just buying a call. And instead of buying the shares, the 100 shares, I can pay $300 and lock myself at 135. So if Apple goes to 160 in the next month, I'm in at 135. That's what buying a call does. If I do it at 140, it's cheaper. Why? Because it's higher. If I go to a lottery ticket and I buy it at 155, it's pennies. But what are the odds of that happening, right? So the higher up it goes, the cheaper the price. So the buyer of the call is locking their price to buy shares at 135. That's what effectively this gives them. Here's a PSA announcement for you. Don't ever sell naked calls. I saw somebody mentioning selling calls. Never sell a naked call. I'll tell you why. If you know how to short stocks in traditional terms, same reason why you shouldn't ever short stocks like that. When you invest in stocks, you spend $15,000 to buy shares. That the most you can lose is 100% of your money. So you can lose your money, but no more. When you short a stock, you're leaving yourself to unlimited losses. You're saying, oh, that never happens, right? Well, look at what happened to GME. Those who were actually short GME went bankrupt. I guarantee you that. Nobody could have survived it. Maybe George Soros could have, but nobody normal could have. That is an event, a financial event that would change lives forever. No need for that. Okay, so somebody's asking, what is a naked call? A naked call is just simply a call, one leg, buying here. This is buying a naked call. That's one leg. This is buying a call spread. So naked is the opposite of spread. So just one call. I called it naked. I shouldn't have. By naked meaning, if I sell a call and I own shares already, 100 shares, it's not naked because I'm selling a call. I'm against something I own. So I don't have risk, except that I may be called away from my shares. They may take my shares away at a profit, but that would be non-naked call. Okay, so here we go. Let's recap. The put side is for protection. Buying a put allows me, gives me the right to sell stock at X price. Buying a call gives me the right to buy stock at X price. Do I have to buy the stock? No. It's up to me. I may want to just waste my money. Do I have to hold the call forever? No, I can change my mind and sell it at any point in time. There's a buyer for almost every call input that there's out there. Selling, yes. So the other, when I said selling a naked call is wrong, what's the opposite of doing that? Is when I own shares. Let's say I own Apple 100 shares. I can put them to work by selling calls against them. Like if I don't think Apple is going to go 145 in the next 45 days, I would sell the 145 call and collect $100. And the worst that can happen is me selling my shares at 145, which would be another $10 rally. And I'll keep the money. So selling a covered call is what I just described. When I own shares, I'll put them to work. I sell a covered call, kind of like create my own dividends. I think they call them synthetic dividends at some time, but that's getting wonky. The definition part is done. We have a put side. We have a call side. The put side is insurance, basically, to visualize it. The call side is hope. I want to buy upside hope. Okay. Now, what I do is I try to sell stuff to create income out of it. And I'll tell you why. So if you take a class on options anywhere, they'll tell you something like in the first paragraph, most options expire worthless. So why on earth would I want to be buying them, right? I'd be more inclined to want to sell them. I'll show you a visual of that. So let's stick with Apple. So this is the Apple shares. I'm not very confident that Apple is going to be 148 in the next couple of months, but I am very confident that it shouldn't be below 115, right? So I would be more likely, more confident if I create risk by selling something down here that says Apple is not going to be here and trying to make money out of it. So if I sell a put or a put spread down here, I'm going to collect money. And the only way, what I need to win is if the stock rallies, I win. If the stock doesn't rally, I win. If the stock falls, I win. If the stock falls a lot, maybe I don't win. Versus buying shares or buying calls or buying call spreads or buying anything. They all need a rally to win, right? If nothing happens, they don't win. If the stock falls, they lose. If the stock falls a lot, they lose a lot. So I rather create income out of scenarios that are not likely going to happen than to buy upside hope. So it looks like somebody's got their own class going on in the chat room. I tried to keep up with it, but I lost track. But anyway, be careful who you take advice from. They may or may not know what they're talking about. And so the idea of selling versus buying, I prefer selling. Somebody asked me that earlier today or earlier in the chat. I lost track. It's easier for me to forecast places where a stock is not going to go versus trying to guess where it's going to go. And luckily, the options table gives me odds. So I'm going to backtrack and define risk. Okay, so I know you think you know what it is, but I can guarantee you nobody's going to give me the answer I want unless they've seen my presentations before. So think to yourself, I'm going to give you 10 seconds to define risk. Just believe like you're defining it to somebody. I'm going to give you a few seconds and then I'll tell you my thoughts on it. So first of all, so potential downside, okay. Risk of loss, want to lose, willing to lose, amount. So basically I'm seeing an amount. Minimizing losses. Cut loss. Okay, so got it. Okay, so the idea is correct, but it's incomplete. It's incomplete. All right, let me tell you. First of all, you have the reward. Everybody's going after a carrot, right? So the first part of risk is everybody got it right. I didn't think anybody missed it, which is how much can I lose, right? That's the amount of loss, the consequence. Everybody got that right. Okay, so the consequence is known. Once I decide that, okay, I want to risk X, I set that amount and I move away from it. This is no longer part of the managing risk. The second part of risk comes in, which nobody mentioned. What are my odds? Okay, so that is the thing we manage. Okay, because if I take a position on Apple based on today's environment, I think to myself, okay, XYZ is going to happen. Therefore, Apple should be at 140. And I think I have good odds because of this. And I do my homework. Okay. And I take my risk. 2-3 days go by and some new information comes out. And now my odds change. So yes, Naresh, yes. So my odds change. So then I have to reevaluate. So that's the part I'm managing. I'm not managing the size of the risk because I already accepted it. I shouldn't mess with that. So that part is done. I'm managing this part. When the odds become unattractive to me, that's when I close my trade. Okay. Luckily, in options, they give us a column just for that. And it's called the delta. Now, if you go read the delta definition, it's got a wonky definition. Something about the amount of money it changes with every $1 change in the underlying blah, 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 blah. To me, it's the odds maker. It is so easy to see it. So current price is 131, correct? That's the price of Apple. So if you buy shares in Apple right now at 131, your odds are 50-50. It could rally, it could fall. You can do homework to give yourself some edge, although you think you have an edge. Maybe you do, maybe you don't, because the person shorting it. And yes, for every share you buy, there's a seller. So somebody thinks the exact opposite of you. You don't take it off the shelf. People forget that there's the other side of the trade. So you buy shares at 131, you have a 50% odd. If you go over here, this column here is called delta. I just gave you the wonky definition by Wall Street's term. Look at it. It's close to 50, 0.5. That's where current price is. So you have 50-50 shot, right? And look, the further I go, the lower the percentage. I've seen that if I go with this one, if I buy this one has a 10% chance of being in the money. Price has a 10% chance of going there. So if I'm buying this one to make money, I have very low odds. If I'm selling it to make money, I have really high odds because it's not going there, price. So whatever I collect from it, it's likely going to be income out of thin air. So this is where the delta is a handy, quick reference as to my odds of success. So if I buy or sell a put or a call, if I use options at all, I can use the delta column to gauge that second part, the odds. What are my odds of winning? What are my odds of losing? And if they come close to being 50-50, for me, I need to change my strategy because 50-50 is Vegas. It's gambling. I need better odds than that. That is my conservative self. And I say conservative from a guy who raced cars and fights for a sport. So I know risk and I stare it in the face. In fact, I sparred yesterday a 260-pound guy. So, and I'm a $180. And so I know risk, trust me. And this is the 50-50 is I have no edge. Therefore, I have to create something different for me to be comfortable with. So now we talked about delta without having to get wonky with the delta thing, right? So then you have some things that are like open interest and volume. People are confused between the two. You can see a column here called open interest and a column here called volume. So I'll answer that in a little bit, Caroline. And so the difference is one is a static number. So if you note, if this was open, if the market were open like right now, this number would not change. These are the numbers are changing. So the open interest is simply what options positions are existed at the open. So this number updates overnight. Nobody offers it live. So during the day, it stays static. The next day, so on Monday, these numbers will be different based on what happened today. I mean, Friday. So this is what's going on that day, and this is the record at open. Okay, so people have different interpretations of a high number. Like they see, like you hear the Nigerians on TV, they love to chase that one big order. But it's counterintuitive, right? So think about it. Think about it if it is, they say that most options expire worthless, right? Isn't that by definition the busiest leg out there? So why are we chasing it? You know what I mean? So the market makers are not idiots. So keep that in mind, that your opponent is better than you because people who sell risk for a living are smarter than us. So keep that in mind. Otherwise, you're liable. You can't go into a casino saying, I'm going to beat the house. You just can't. You go in and say, I'm going to try to do well and let the house keep its money. So this is the open interest and the volume column. I have the delta column on there. I also show the implied volatility, and I'll explain what that is. So you've heard of the VIX on the whole market. Okay, so you also, this is a representation of like the VIX of the particular stock. So how nervous are people for this stock? If it's a stable stock that doesn't move a lot, it will have a low VIX. The crazy VIX is something like GME went up to almost 1,000. So the 1,000 is unusual, but it makes everything expensive. So when it's a high implied volatility, they call it IV, high IV. It means that you're overpaying for everything. And usually it's a high implied volatility when somebody is reporting earnings. So can you think of a company that's reporting earnings? You can look it up and you can tell it has high implied volatility, higher than the normal. Etsy, Okay, so let's test that. Somebody said that Etsy's reporting next week. Let's see. This is next week's contract. Implied volatility is 100%. That sounds pretty high. Let's go out to say June. 50%. Yep, you're right. Etsy is reporting. See, the implied volatility normally is 60%, 58%. But next week, it's 100%. So if I buy an option for next week, puts, calls, whatever, I'm overpaying just because it's going to have an earnings report. Okay. So it's a premium. So if once it opens after the earnings report, that drops to 60, and then you lose 30 divided by 94, almost 25, 28% air math of your value disappears just because the event is gone. So you're overpaying. Trade options in earnings week. Well, I avoid making big bets on the week itself because it's a coin flip. You're saying, oh, they're going to beat the number, so they're going to move up. That is false. The reaction to earnings is nothing to do, short term, nothing to do with the reports. Proof, Amazon had the best report ever, and it had the best upside reaction ever, and then it gave it all up because it's up to expectations. The human element, we don't know. Long term, sure, but short term, it's an not even the stupid analyst estimates. It's not that. It's the expectations. It's nobody shows it. Nobody reports it. And if you challenge me on this Amazon thing, I'm going to challenge you right back. Okay, so drop everything you're doing, stop typing, and listen to this. Think back. There's not one bad report from any mega cap company in the last 5 years. I don't remember one bad report other than IBM, who completely stinks up the joint all the time. Not one bad report. Why aren't all the reactions to earnings up? Okay, so the expectations is what drives the reaction to the price, and it's a coin flip. It could be 60%, 40%. I don't know what it is, but it's definitely not 1-to-1 or even 90-to-1. It should be that at least 90% of all earnings reactions are up, but they're not. That's proof positive that it's not up to quality of the earnings because all the earnings were awesome. Yeah. So, and sometimes stocks rally on crappy earnings. So don't say I'm going to do homework and then decide that, okay, I'm going to buy the stock ahead of the earnings. So yeah, I don't chase the earnings reaction. Sometimes I play a lottery ticket with it, but that's the extent. Okay. Not everything is priced in, Joseph. I agree somewhat. They always have a party at the end. Okay, so back to the task at hand, the options, basics we've covered. There's so much more involved with learning the Greeks, but I don't spend time sweating it because to me, it's they overcomplicate things and they if you try to be too smart about it and ignore the very basics of it, like if the price action is forecasting plus or minus $25 or $30 price range, I shouldn't be buying anything outside. So somebody asked me, what delta levels do I like to buy? So this is a personal preference thing. I like to buy about 30. So here. So if I want upside hope through June, I wouldn't go further than 220 in this stock. What is it? Etsy. So I would not go more than 220. It's just too far away. Then I'd have to not only guess move up, but size of move. So I don't. I want to start making money right away. Okay, so what's the advantage of using options is they're leveraged, so they have a bigger bang for the buck. And for example, on this day, if the price went up 50 cents, 50.5%, the options would be up like 10%. So it is bigger bang for the buck, but that cuts both ways. So if you guess wrong, you lose faster. So they tend to carry they give you the opportunity to screw yourself faster. How about that? If you wing it. So if you wing it in buying stocks, you're going to lose. If you wing it in buying options, you're going to lose. It's how fast you're going to lose. So that's what makes them dangerous. But let me share with you a scenario. Okay. So I'm going to use Tesla, right? Everybody knows Tesla. I'm going to share the chart of Tesla. Okay, so Tesla right now is at 700 and change. Let me ask you this. Would you love to own it at 320? Yes. Okay. Stop. That's all I need to hear. Would you love what? Okay, I answered on the buy and Ramesh, and the sell is much higher than that. I want to sell everything at a 15 delta at max. I want odds in my favor. Okay, so all right, so here we go. If I will love to own it, what did I say? 320. Let's go see. And let's say I am busy this year. I don't want to pay attention too much to price action. Something's going on with my platform. Of course. There we go. So what do I say? 320. All right. So how about somebody pays you today $1,200 if you promise to buy their shares at 350 this year? Okay. So selling that put is risky, but how much safer is it than buying shares? Okay. So if you bought shares here and the stock falls to 350, that's a 52% drop on your money, right? So if I sold the put at 350, I collect $12. That means the stock has to fall $12 below 350 for me to start losing money. Somebody asked earlier, where do I start losing money? That's where I start losing money. But in the meantime, so when I sell a put, there's a position in my account and it's worth $12. I collected it. So no money left my account. If price falls, that $12 is going to show like 1,000% loss, if not more. But it's paper loss. If I don't touch it, nothing happens. One day I will wake up owning the shares at 350, and all of those paper losses will go poof, they disappear because the person took the advantage of whatever I promised. I promised to buy the shares. I wake up, I own the shares. I can immediately turn around and sell them. And if I sell them above 340, 342 or with 345, depends on how much I end up collecting, I have $12 buffer. So as long as I sell them before $12 lower, I'm still profitable. Nothing happened. I collected, I promised to buy the shares, I bought the shares, I sold the shares, I made money. Meanwhile, somebody that bought the shares is down 50%. So tell me which one is safer, stocks or options? I spent nothing out of pocket to be long Tesla with a 50% buffer or more. Somebody spent a crap ton to be long Tesla right here buying shares, is down 50% on their profits. I don't start losing until in the 40s, 340s. So it can be riskier. It depends on what you do. That's it. If I buy calls and price doesn't do anything, I lose my money. And that's a lot of money. So it depends on how you use it. You have the opportunity to speed up your the way you profits. So yes, I don't sell a put. I cannot afford to buy. Okay, I use Tesla as an example, but I could have done it with Apple or with Palantir. Okay, so I sold puts in Palantir. Okay, in fact, let me go. Let's see what we have here. Okay. All right, so squares by skills. Okay, here's skills. That's the real order from skills. This is my practice platform. I share trades with members, and this is one of the setups I did. One on the same day, I shared a trade that's, hey, I think Skills is basing. It could have a rally, and you bought a call spread, and it cost 260 at the time. Now it's 180. So that call spread has lost money. At the same time, I sold the put instead of buying the calls, and that put is making money because I sold it for $1.15. Now it's worth 85 cents. So if I did 10, I would have 200, almost $300 in profit. So anyway, in this case, you can see the same order at the same time. One is making money, one is losing money. So it all depends on the situation. Let me see. Is there another one? This is NEO. NEO buying upside call spread or selling downside put spread. So buying hope that price is going to move, or selling risk below when the stock was falling. I did my homework and I sold and I collected 40 cents. Now it's worth 3 cents, 4 cents. So this one made money. This one did nothing. Didn't lose money. It just did nothing. This one made money. So if somebody sold it naked, meaning sold the put alone without a protected put, they made even more money. They collected $1.52 to open the risk. So they collected $152 right away to promise to buy 100 shares at $30. That's doable, right? And nothing happened. They made $140. Okay, so somebody's mentioning wide bid and ask. Caroline, I don't care about bid and ask because I only deal with liquid stocks. So if a stock is not liquid, I just don't trade it via options because they will screw you. So the mark is where everything is going to fill. So I'm confident that if I go to trade NEO, bid's 10, ask is 12, somewhere in the middle is going to be the fill. If I do that in, I'm trying to remember, Lulu, very wide. I don't trade Lulu for that reason. I just can never get a good bid and ask, a good clean cut fill. I get quotes that are wonky. Okay, so yes, if I want to sell puts in big ticket items like Tesla, first of all, it's a high dollar ticket, and the implied volatility is high, and the VIX is high. It's going to take a lot of margin. But I want to caution you, the word margin with options means something completely different. When you do margin in stocks, you actually borrow money and you have to pay interest on it. So in this case, there's not. It's called a margin account, but you don't borrow anything. It's all cash secured. So if I have a $50,000 account and I take a risk that risks $5,000, the margin is $5,000. That's it. So they reserve $5,000 out of my own cash and they lock it for as long as I have that risk open. Once I close the risk, poof, they unlock it. So there's no borrowing involved. So be careful. It's not the same. When entering calls and puts, do you have to make a timed entry to be profitable? Okay, Lorenzo, thank you so much for this question. So Lorenzo is asking basically, how do you time your entries and exits? Okay, so let me backtrack to the basis of all success. So stop typing and listen. Put down, grab your pen, actually. So here's the secret. The secret is, I call it NTNT. So you need a reason. I need a reason to trade. Somebody's asking, what's the actual strategy? I don't know what you're waiting for, George, but I'm sharing all kinds of strategies. It's just a matter of what's coming here, your thesis. Okay. So the strategy can be a zillion different things and depends on the thesis. So I can look at a thesis based on fundamentals. For example, somebody does homework on BlackBerry. I've just picked it out of the blue. And they say, you know what? They're not doing much now. They still have about 900 million of revenue run rate a year, but they have so many secrets in operating systems that the new, all the self-driving fleets are going to have to come to BlackBerry. So it's going to have an explosion next year. That's a thesis. They buy upside hope for that. They buy shares. They buy calls. The strategy for that, George, would be to buy in the money call out to next year and sit on it. and or sell a put below it, or do both in order to be long for free. If you're right, you're really long BlackBerry. If you're wrong, you own BlackBerry lower. No money out of pocket. It's kind of like the stock replacement strategy. Okay, so the alternative, a different kind of thesis would be a technical thesis, which somebody's talking about Fibonacci ratios here. So that would be a technical level. So I say NT, NT, no trigger, no trade, or no thesis, no trade. So if I don't have, and by the way, I think the stock is going up is not a thesis. I think the stock is going up because they're going to have to do blah, 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 coming down the line. That's a thesis. Okay, the trigger is easier to find. So what is this? Apple? Yeah, I can put an alert right here. I can say above this is tradable. Upside. So that's a breakout potential. So if they can get priced through here, they can get to the next level, and that will be a trigger all by itself. So if I'm sitting twiddling my thumbs, I'll put my alerts, and then I'll say to myself, the alert comes through, buy Apple, I jump on it. I can sell a put, buy a call, buy shares. Those are methods, but I needed the trigger for it to happen. Okay, so where do I buy and where do I sell inside the options table? Those of you who are new are kind of like fuzzy about it. What the heck is he talking about? So I showed you options, call on the call options and put options. They're asking me, which ones do I buy? How do I decide how far from current price do I buy and sell? It depends on my goal. And you can't expect to know all of this stuff in one sitting. The best, if you've never seen options, the best thing to get out of today is the fact that these are tools that allow me to get to trade big stocks without risking a lot of money. But I have to be careful with what I buy and what I sell, because I can end up spending and losing a lot of money if I start doing it willy-nilly. Okay. So for those who are looking for an answer, when I buy something for position, like if I'm chasing a breakout for Apple, I don't want to buy too high up because I don't want to guess the magnitude of the move. I want to only guess the direction. Because if I buy too high up, then I not only have to guess the fact that it's going to break out, and I need to know how much. So in this case, the upside potential is significant. It looks like an inverse head and shoulders that could take it to 152. I think it's going to have a lot of resistance. So I would want to see a breakout confirmation to chase it. I don't use Fibonacci levels as triggers. Those who do harmonics use it religiously. And in order to do harmonics, you either have to be a specialist in it or follow somebody that triggers you on a specialist, like somebody who knows their stuff. Otherwise, you're playing with the big boys and girls and you're going to be at a disadvantage. I keep it simple. Look, I don't have any indicators. The only thing I have is volume profile on here. So what is, somebody's asking technical stuff on charts. Let's talk charts for a little bit. What is the best tool you have, like right now, on you? No. Eyes. Mikhail wins. Michael. I don't know how to pronounce your name. Eyes. Yes. Eyes. Look left. Wherever you are, look left. Like if you're buying Apple here, you didn't look left, because that would have told you, wait a little bit. See what happens. Last time they were here, they failed. See what happens. You anticipated and you lost. So not a big deal, but it's a disappointment, right? Somebody did it on Friday. They got screwed. On Thursday, I should say. Okay. And this level has history. Look, right here, right here, right here. So they warned you several times. This is not a place to take for granted. 144 is definitely a place I would book Apple if I'm long. In fact, you could short it going into it with a tight stop. There's a thesis for you. Short with a tight stop. What does that mean? If it goes above that, that means I was wrong. That means I should close my position right away. So this is how you manage risk. The odds are I'm wrong. I was just proven I'm wrong, so I should get out. Okay. Where do I find these charts? This is TradingView. It's a good platform. No, Alexander, I have a service in there. You can find me on the MarketFi side as well, or reach out, message. Delta again and use the Delta. Yes, Alexander, I will do that. All right, let's go to the table. Somebody's asking to cover the delta again. Okay, so the delta has a wonky definition. It's the amount that the contract will move with $1 move in the stock price. So to me, I use it like a percentage. If you look at it, what is the price here? 335. Well, let's pick a different stock. Something, the SPY maybe. Okay, the SPY is 417.30. And, oh, that's too far out here. Let's go closer in time. See, I'm switching, go to May. Look, position. So 417, let's see, 417.30. So the price is right here for the SPY. And the delta is 0.5. That's your coin flip. The idea is that the further I go from current price, the lower my odds. You can see the number dropping and dropping and dropping. Okay, actually the SPY is not good. We'll go to Apple again. It's easier span. So you can see 50-50 shot down here, only 20%. So this 0.9, I consider it the difference between that and 1. So I have an 80% chance of price going there. I mean, 20% chance. So if I'm a buyer and I buy this one, I have a low odds. If I'm a seller and I sell it, I have way better odds. So here, the seller has edge because it's too far. The market makers only give it about $6 worth of move. So that's the maximum range of the market maker. Yep. Somebody asked me what version of TradingView I have. To be honest, I think it's premium. I don't pay for it because I use it and it gets a lot of exposure from my thousands of charts a week that I share. So it's kind of a sponsorship thing. But I think their first level pay is $15, but you don't need it. I mean, it has a lot of features without any pay, but this one is not there. So this is the volume profile. IV low on Apple, good time to buy. I don't look at the IV to determine my buy. I look at the chart. So if you don't believe in charts, or in fact, the more dangerous part is if you believe charts are stupid, then you're trading in the at a severe disadvantage because we've got Jim Cramer in here. Don't trade Apple. Okay, so the idea that to ignore the charts. So here's the statistic they give us. They say that only 20% of the action is done by humans. So all your 80% of your opponents do nothing but charts, and they're super good at it, and they have way better brains than we do. So if we don't think like a machine, we're missing out on a lot. So I used to be a fundamental trader. I used no charts. And over the years, I met a lot of strong 30-year-old, like they've been trading for 30 years, nothing but futures. So I can tell you they're super experienced traders. And I've learned a lot. And one thing, if you tell me now you can either use fundamentals or charts, I would pick charts over the fundamentals. Is it a good time to buy a put? Same answer. I have no reason to buy a put in Apple. I am short Apple, but I shorted it for the earnings, and it's a little bit green. I haven't closed it. I may close it. And the way I shorted it is just buying a soft debit put spread. I bought a put position, not a naked put. I spent $1 risking to make $4 or $9. It was a $10 white put, but I have time on the clock. So I thought that Apple has the chance of coming back towards 124. No specific reason except it was to balance my order book. That's it. I had too many longs, and I did not do in the money. It was out of the money trade. It was just a delta of 30-ish. Okay, so somebody's asking, what's the difference between buying a put spread and selling a put spread? When I buy a put spread, I'm expecting lower prices in the stock. It's a bearish position. I need price to fall for that put spread to appreciate in price and make money. If I sell a put spread, I better sell it at a place where I think price is not going. This way, it's a bullish position. In fact, it's called a bull put spread. I call them credit put spread because it just describes it. I collect the credit. And in fact, let me show you something. This is my forecast. If you become an Ultimates member, you will get this chart every week. So the boxes I draw a week in advance. So this is next week's action. If I sell a put spread below this, I expect to win. And it's almost always the case. It rarely fails. The only two that failed was on the super duper breakout here in the small caps. They went too far up. So those who sold an iron condor, you've heard that term, which is basically selling a put spread and a call spread at the same time. I needed price to stay in the box. It didn't. So these are next week's boxes. So if I want to sell something, I'd sell it in here. It's recording. Which spread is good and low risk to pay less? Do you need to own the underlying to do a spread? No. Let's do spreads. A lot of questions on spreads. Okay. So stop typing and pay attention. Alexander, you can just make sure that Harvey sees you here.
Yeah, maybe before we continue with questions, I can just quickly share with everyone asking about how to get more information from Nick. So Nick does have a premium newsletter with Benzinga. Basically what this service is it's not, it's called a newsletter, but I don't really see it as a newsletter. It's basically a way for you to, what we like to say, learn why you earn. So depending on the tier that you go, there's a couple different tiers. There's a starter, there's enhanced, and there's an ultimate. Depending on the volume of trades that you want per month, and that depends on the amount of time that you have to trade and how serious you want to take this. My recommendation is that you at least go to the second tier, which is the enhanced. With enhanced, that means you'll get about 6 trades per month. You'll get 2 a month from the starter, and then you'll get 1 a week from the enhanced. And each trade idea that Nick sends comes with a video about 8 to 10 minutes long, explaining the trade, different caveats that he has with that trade. Comes with the table, a chart, basically expiry. Typically he does a call trade and then a credit put spread. And that is honestly, from the reviews that we have from our existing subscribers, and Nick, you can probably go through, talk about your win rate and average return per trade. We're getting some questions on that as well, just so people understand, based off of your bookings, the type of returns subscribers are getting. But what I'll do is I'll share a link in the chat. I've shared it a couple times, but today we're offering a 30% off discount to Nick Shahine's premium newsletter. That's where you get trade ideas directly to your inbox, as well as SMS alerts when he makes them. And these are actual trades Nick is making. They all come with the video. And that way you're going to actually learn. You're going to learn by doing. And that's how you're really going to get the most and where you're going to get the most mileage trading options. So I'll drop that link in the chat for everyone.
So I hate to call my stuff as a trade alert because it's more of a learning experience, because I'm so consistent with the makeup of them that hopefully by the time somebody is that legal, by the time somebody goes through a few months, then they get it and they can do it on their own, kind of like the teach the fish type of a deal of a process. So every trade I set up, I share a video. I tell you, first of all, the macro, what's the world look like, and if the stock market is going to fall or rally, and what the trade would look like within that, because nothing happens in a vacuum. So even if I love a stock, if the market corrects, it's going down too. So that's part one. Part two is the thesis behind it, maybe some fundamentals about the company, and then the types of trades that I'm looking for, the reason why I'm doing it, and am I trying to catch a falling knife? Am I trying to catch a breakout or something like that? And then I share a table, and the table would look like this. These are 3 different tables of actual trades. So to tell you, there are 2 that buy stuff and 2 that sell stuff, right? Usually I like either of these 2, but I do share these because people sometimes just like to buy. I would never buy, rarely buy, a $13 naked call. What is a naked call? $13 call without any protection, without selling it spread or anything like that. So in this case, it was when 423. So that call yielded big profits right away. If you see it here on April 27th, it was $19. So whoever paid 13 made $600 out of $1,300. That's pretty big, right? But if they hung on and they didn't book it, now it's only worth 12. So that's how fast naked legs are. Somebody that did a spread instead, bought a call and sold a call to spread it, and we'll explain that later. They're even. So it's a slower moving weight. Look, slower trade. Okay, fast trade, stop, tight stop. The other ones are selling. So here I would sold a put, and here I would have sold a credit put spread, different style. One is green because I collected 294 to open. Now it's 229. That's green. The other one, it's flat. Time on the clock. These are June trades. Okay, so here's another one, Tesla. I did not recommend a naked call Tesla because it's gobs and gobs of money and that would be irresponsible. See, the spreads have not done much. So credit put, if you sold a naked put, you made some money. And if you sold a put spread, you made some money. But here, different time frames. I say for this one, I would do June. If I'm selling a spread, I would do May. That's why this one gained fastest, least amount of time, and 2 different kinds. Okay, so how much do you generate a year for strategy? It all depends on what you're doing. If you do 1 contract or 10 contracts, how much is up to you? There's no way for me to answer that. All right, so this is as detailed as anybody can get you. And these are not foolproof strategies, that's for sure. But this part, as far as stats, these parts rarely lose. That's how they're designed. They're designed with a low delta. Look, I have a delta column right here. All the selling is hopefully under 0.2. Look, I'm very consistent. These are the most 2 aggressive ones, which means this one has a 94% chance of success. It means there's only a 6% chance that Tesla will be at 500 by next month. That's how I would interpret this. So if somebody has the room and somebody wants to buy shares at 500, this is like, quote, as safe as an investment as one can do because it's $200 higher now. Wouldn't you love to buy $200 lower and get paid $500-600 to do it? That's the idea. So these kinds have a high hit rate in a good way. Okay, so what's a spread? Let's pick Tesla. No, something else. Anyway, yeah, we'll do Tesla. Darnell, I'm afraid because you're going to use it to trade. I don't know if you can buy it or not. So I will do it in a minute. Let me see. We are doing $700. Okay, so that's Tesla now. So if I go to June and I want to buy a call for Tesla at 7:30, it's going to cost $45 per contract. What? That's $4,500 for 1 contract. Not my jam. I'm not that guy. So you can do a spread because this one, I buy it, I spend money, right? So the spread literally spreads the risk. So if I buy this one and I sell that one, suddenly I'm only spending $420, but I'm capping my maximum limit of what I can make. In this case, $10. So I can more than double my money. Shame on me for doing that? Heck no. At least now, if I get a couple of red days, I'm not down 40%, 60%. Whereas if I bought this for $4,500 and Tesla has a bad day that turns into $2,500, not for me. So you can make a lot of money. People who gamble do that. But in the long run, that unless they're super lucky or unbelievably good, that's not a preferred method that appeals to many people. This one is a gentle trade to be long Tesla for a month. In fact, I can do the same trade for a month later, and it costs about the same. So now we're up to July. Now we have 75 days for Tesla to rally. And if I want more than that, I can go to September. Cost me about the same. Why is it about the same, Nick? Because I am buying one and I'm selling one. Now it's 100 to buy one and to sell one, but I'm doing a spread. I don't care. The difference is still $10. It can be anywhere. It can be here. I'll pay more, $1,200, but now I can make up to $30. So $28 net. $18 net. What if Tesla passes 740? Great. Nothing. My maximum limit is $10. So it could go to $1 million. I can only double my money. Is that embarrassing to anybody? Only double my money. Jeremy is lost. I'm not sure where. So, Jeremy, let me try to orient you. I buy this. I spend $100 per contract. That makes me long Tesla, very long Tesla. It's a lot of money. I want to hedge my bet. I sell something above it. That caps my maximum potential profit. If Tesla rallies, this is going to grow. This is going to grow. I paid $425. That's going to turn into 10 eventually. Therefore, I can sell it for 10 and keep the difference, $6. Can I show the risk reward? I don't know from which perspective you mean. Not per share, per contract. So in this case, it would be, I spend $425 to open this trade. Watch. That's a good question there. So to open this trade, one contract gives money out of my account, $426. How much can I make? If it goes to $1 million, the price of the stock goes to $1 million. So price is above both legs. This should be 10. So I can sell it close it by selling it at going rate, which is closer to 10. So if I sell it for 9 or 10, then I collect $1,000. So 600 is my profit. Is it going to $1 million? Kristen, seriously? It's Tesla. It could go to $1 million. No, of course it's not going to $1 million. Not until, the year 22, 25 or something. Lower than set. The only way I can make money out of this trade is if Tesla rallies. I'm using actual numbers. What are you talking about? I'm saying by $1 million to say that it's above the price. I thought that would be the simplest way of saying it. Okay, if it goes to 740.1 cent or higher. Semantics there. Vertical line on my screen. Where? This one? Pop up. I don't know.
Why don't we, I think normally around this time, we ask the audience to drop tickers and we can start going through some of the tickers and you can kind of give your analysis on that.
Yes.
I also want to mention, with this newsletter, basically what this comes down to with the discount is you're paying about $5.65 per month. If we try to look at it as a monthly cost, if anyone here is paying for Netflix, Disney Plus, Spotify, Apple Music, I don't know what other subscriptions you might have, but for $5, $6 a month, you're going to be getting high conviction trades from Nick himself, and you're going to learn something about options trading. And I've been with Benzinga for about 8 months or so now, and just from the feedback we get from subscribers, and I think Nick, you were talking about in the last one about a message you got about how you've changed someone's life, and we
Yeah,
get
somebody,
messages
David,
like
I
that.
believe,
Yeah,
he said him and his wife did some fantastic things on their financials. But I don't want to take credit for that. He might be doing some other stuff I don't know about. So, but I'm glad he's in our group.
yeah. So, like I was saying, there is a 14-day full money back guarantee. There is absolutely no risk in trying the service. If it's not for you, that's not a problem at all. You just let our team know. We'll refund your money back. No harm, no foul. As soon as you do sign up, though, you'll get instant access to all of Nick's previous trades. Um, I think we're about that time where you'll be sending the starter trade for May
Yep.
shortly. So that you'll be able to get in on that. How much is it? So the way it works is there's three tiers. There's a starter, there's an enhanced, and there's an ultimate. They are stacking subscriptions. So what that means is that as you go to the higher tiers, it adds more picks per month to your account. So as a starter, if you just want to get uh, started with it and just get a couple trades per month, it'd be 2 trades per month. That comes down to, I think it's 67. Let me just check the exact number. 67.90 per year. Per year. A lot of these services out there are charging you thousands of dollars per month. This is $67 a year for 2 trades per month. If you want to get a bit of a higher volume, which is what I prefer, because you're getting about 6 trades per month. After you check out on starters, you'll be asked if you want to join the enhanced, and that adds an additional 4 trades per month, 1 trade per week. And that's where you're gonna start getting a little bit more serious with options. You're gonna get videos and more educational resources from Nick on a consistent basis, and that's where you're going to start getting, consistent returns, and you're going to start making, some good income on the side. And we have so many countless stories where someone joins in and on their first 2 trades they make money, and that covers the cost of their subscription for a year or two or more. So for a 14-day free trial, there's absolutely no risk. We will add the link in the chat again. And there was a bunch of tickers above the chat, and this chat's so quick. So I don't know if you want to scroll up again, or if people want to just drop the tickers again. We can kind of.
I caught a few, and I've been doing them while you're talking, and hopefully the people saw it. Resistance zone. So this is Roku, for example. If you lose this one, you're going down to here, but it's a reason to get long if it comes down to here. AMD, CCIV. So CCIV, I don't like the company as a prospect because by definition it is a niche market. Cool cars, but they're not Teslas. They are literally attacking the 1%ers out there. So you've got hideous resistance above here. I would not catch this falling knife. If you know something about the company, then great. If not, these are exit points up here. So that's CCIV. Clover, I wouldn't short it. So one person's opinion of a bad disclosure statement shouldn't discount the fact that it's a legitimate company and it operates in gobs of number of states and expanding. So if it comes back into the base, I would get long Clover. If I'm long, I'm not worried because somebody said so. If it takes this out, it's going, and we need insurance companies out there. Twitter, I just showed you the chart for Twitter. You can see the notes on there. They're still valid. This was a support zone, but then if it lost, it goes to here. Well, somehow, some reason they spit it out like dirt. I went to look for it to sell puts and put spreads. I didn't see enough premium but if I'm long, that's not where I get off Twitter. That's where I consider longs in Twitter. I would avoid MVIS, I forgot the name of the company, Microvision, just because it's LiDAR and the company sales are like falling at an alarming rate, and the CEO tells me we're on track. I'm missing a piece of that puzzle. So Verizon, I think it's a good play on dividends. Somebody said QuantumScape. I would be very careful. So I'm an engineer. I'm an electrical engineer, believe it or not. That's how I started my life. And I read what these guys are trying to do. I don't think it's physically doable. So they are, if they can do it, wow. But to actually make a solid state battery that works in a car load, under all temperature conditions, that's going to be something amazing. So what I'm telling you is, I wouldn't average down in QS. If I took a risk on it, so be it. I see this BFLY come up often. I can't remember who it is. Wait, that's not it. Butterfly Network. That's it. Okay, so this must be a SPAC looking like all other SPACs. So if I'm long and it goes below 1291 or 1280, I'm out because I don't know what's below here. The sellers are in charge. Every pop will be sold. If you want to sell it, if it hits 16 and that gets you out of trouble, I would get out or at least change my risk. 16 and 16.7, 17 is going to be very, very difficult to overcome. That's my opinion. Skills, they have earnings, I believe. And I did issue a bullish bet on it, played out temporarily. So I would be more of a buyer than a seller. How about that? That's a good base. So it is, the earnings reaction is scary because we don't know what they're going to do. Not they, the company. I know what they're going to do, but I don't know how people are going to react to it. I had a downside scenario and it played out. It almost played out. But if they lose this one, I don't know where it's going. But I see no reason. I mean, I understand it's very popular with anyway. It's coin. Okay, so do I talk coin? The stock itself, if you believe in the company, then there's no reason to get out here. This was an unfortunate start, but that doesn't mean it's a crap company. People still don't believe in cryptocurrencies, and I think you'd have to be blind to not believe in something that costs $60,000 on a Bitcoin basis. So they say, well, it's bull crap. Well, let me tell you this: cryptocurrency is as real as gold. The only reason why gold has any value is because we believed it does. That's it. It's a yellow rock. It does nothing for us. Sarepta. There's value in Bitcoin because enough people want it and it's rare. Whether it's true or not, whether it's real or not, to you, doesn't matter. It's the fact that there is a market for it. Okay, Sarepta, pretty heartbreaking condition here, right? So you'd have to go out to a weekly, to actually maybe even a monthly. So this is a monthly chart. You can visually see that from the year 2000, this has been an issue where it's at. So if I stayed long, I'm stuck. This is not a place to get out. So when it fell, I had a few friends that were long. And I said, if you want anything, you got to sell into it. Like instead of buying shares, I would sell a put to keep yourself some buffer. So it's hard to say get out because I don't know the company, but it's definitely not a place to panic out because it's already, the damage is done. Okay, so AMC, I am short just because of the fans. I got accosted just for sharing just a bearish tone. I wasn't like belittling the company. I said, I don't understand how a company could recover to perfect levels. So where is COVID? This is COVID. The world was perfect. First of all, the stock was broken before COVID. Then COVID hits and nobody can go to the theaters. Nobody can still go to the theaters, maybe a little bit. And now it rallied up to here. This is normal conditions. We are nowhere near normal conditions. And then I got berated in social media. So I said, I'm taking a bearish position and it paid me. So I may stay bearish. I don't know. We'll see. I bought a debit put spread and it's working out very well. So it's not a conviction sell or anything. It's just pissed off at the reaction I got from the fans of it. Neo, I would get long, if not long, on dips. So every dip I bought by selling put spreads. In fact, I just showed you a position in Neo and it was working. I issued a long Neo just before it popped last time. And it was an amazing, huge win last week, I think. I can't remember exactly when. But anyway, it was good timing. I didn't stay long through I think I got out at 41 and change and it went to like 43. So I didn't time the exit perfectly, but I never aim at a perfect exit for me. I got out when it went into prior resistance, and I'm okay seeing it going without me. So here it is. We have a strong base attacking a neckline. So if markets hold up, this one is going higher. Did you see at the rate they're growing? It's a legitimate company. Roblox, I would own for the long term. I would buy the dips, meaning if it falls, I would sell puts or put spreads, because when you can make money off of kids, that's a moneymaker. I think Roblox is popular with kids, right? That's the gaming company. Phew. Vuzi. I can't remember what they do, but I do cover it. There you go. You don't want to lose this one, and there's no indication of it. You have support at 22 and support at 20, but that must hold. It must. Otherwise, you're going to 15. Snap, crackle, pop. If you're old enough, you know what I just said. If you're not, okay, so Snap, I had a huge win years ago, last year, whenever it broke out from 12 to 18. You need a trigger above here. So if you break through that resistance zone, so the first mini trigger is, shoot, I can't see it, 64.40, and definitely above 66, you can chase it because they're going to challenge that. Or buy the dip into any of these lines. 55 has support. There's proven support at 56. If for some reason the market's hiccup and it goes to 50 or below, it's a definite more better long workhorse. I'm scared of a company that the stock does this and it doesn't recover just because they lost one order. There's more to this story. Be careful. I wouldn't average down. I don't care who likes it, ARK or not. I told the fans of Hyliion to get out at 18. They fought me all the way through, and they still call me a jerk for saying it, instead of saying, thank you for getting me out. Anyway, so be careful. Why is this stock broken when the company supposedly is not? And then DM, I did that, I thought already. Maybe it was earlier. Palantir, I would own. I would buy the dips. I'm long. I'm long several ways. I'm long via credit put spread. I sold puts. I bought calls. I booked some, but I'm still long. This was terrible. This ruined the whole stock because we had a nice breakout available, and this just took all the energy out of it. So now they're going to spend some time building another breakout available and then take it out. They have earnings coming, so maybe management will tell us something good. They have about $1 billion worth of booking, so they're worth staying with that. Fubo. I don't understand why it's this low. It's kind of like Workhorse. I mean, they do have a service. They compete with YouTube TV. I have YouTube TV. I considered going to Fubo, but I can't convince my wife to change. Pins. So Fubo, I'd stay long. I'd buy a long for a long shot, but put a stop. Like if I lose 20%, I'm out. If I lose 15%, I'm out. I don't have a specific trigger for it, so it's more hope. What are we looking at here? Pinterest. I don't get it. It should be higher, but it has good support. If you lose this support, you're going for a ride to 52. And if you do, it's a buying opportunity. So don't be upset for me saying it. BYND, they have a new formulation coming this week. What? Have they heard of the situation of new Coke? So yeah, be careful. It has good opportunity, but I would stop out because this one moves fast. So if it loses whichever stop out level, I would get out and get in lower. Square, I'm long Square. I booked a lot of profits, but I'm still long. Long term, it's a winner. It's in everything that I like. FinTech, that's where it's all about. And they also have their fingers in everything. I would, if I'm long Visa, I would get out of Visa because of where it's at and roll into something like Square, even MasterCard.
Got a couple of questions if you use shorter time frames.
Yep. What? Do I use shorter?
Yeah, there's a couple of questions like, hey, Nick, do you use shorter time frames?
Of course. It depends on the
or shorter.
Yes, of course. So let's talk about this in Blink. Okay, so I've issued trades on Blink. I don't remember when or what or anything. So stop out levels, these were them. And I always say, okay, so I'm optimistic, but beware that this could happen. Okay, so this is where I would decide if I want to ride it down or not. And if I were an active trader and I need more information as to what would cause it to rally, I would definitely need shorter time frame. Right now we're at 1 day chart. So I usually zoom in to 2 hours and see if that gives me enough information. Right here, I have a lot more information and I can show you what I see. I see a box right here, this box right there. So the edges of these boxes, this box, so 35.80 down here and 40 point, almost 40.8 at the top. Those are actionable items. Within it, I see other levels like right here, 39. But now we're talking wonky stuff, right? So if I'm an active trader, I better be at as low as feasible. So in this case, I don't think it pays to be less than 30-minute charts. Yeah, it's just too choppy. But it depends on what I'm trading, of course. Yeah, I zoom in, I zoom out. I have to see weeklies. I just showed you, I went to a monthly chart to get perspective. Like for GE, you can't evaluate GE from one chart. Like, look at this, right? Weekly doesn't even do it justice. Well, maybe it does. Take the lines out. You can see, so this level, they're fighting demons from 2018. So they won't be easy to break through. However, it does have a short-term opportunity by using a lot of imagination, as SpongeBob would say, imagination. So I have a stretch equal to this stretch. These red lines are equal. And then in between them, so it's 41 days and 41 days, the two rallies. In between them, there were 45 days. And we're going on something close to it, maybe 40. We're overdue for one, right? So we're 50 days, 49 days, 50 days. So is this the base of another stretch is what I'm saying. It's a ridiculous way of looking at things, but I monitor the box. And if they get out of this box, I'm going to assume it's going to 16 and chase it. XPEV, I like it. So Tesla, NIO, XPEV are my 3 picks on EVs. And if you trade overseas, VW, which I think is going to be the ultimate winner in EVs, believe it or not. AI, man, that thing is breaking my heart. So I'll leave these lines, read them. Those are actionable lines. AI, so I don't believe in the company. I'm long, and it's been painful just because I believe in the guy. He's going to sell it. That's the one from Siebel, right? Yeah. OCGN. Ocugen, yeah. They're the ones with, they have a vaccine coming, right? Something about, yeah, Covaxin. So it's hard to short it. And as far as a trigger long, a real trigger, not a headline expectation, it's beating this guy. So 1370 and above, it might spike, but it's not my jam. So you better do your homework. I think I did PKNG as well. So I'm going to skip it for now. Zoom, be careful with Zoom. GoPro, I like GoPro from the, okay, so stick with me, Sal. The LiDAR company, MVIS, Microvision, I think is in trouble because of what Tesla said. Tesla is the best, they have the most miles driven of smart cars as far as driving, smart technology. And they just said last couple of weeks that they are committed to cameras for eyeballs, not LiDAR. So if the one with the most experience said, let's go with cameras, it doesn't bode well for LiDAR companies. So be careful with that. Enphase, I like their product, smarter than the Tesla wall, but it depends on marketing. Do they have spending power like Tesla to outspend Tesla? So Tesla this year will have cash to spend on the other stuff. So Enphase might have some competition. So let's look at the chart of Enphase. Okay, so 2 things when you're looking at charts. 1, levels, right? So pay attention. Stop. Pay attention. So levels, right? I said eyeballs. What are my tools? First tool is eyeball. So this is Enphase. Somebody just asked about it. Look at this bounce. Super solid bounce. Super solid bounce. Why the heck are you back here? So you lose that, you're going for a ride. You're going to have an opportunity to stop here, but if not, you're going to here. So I'm not calling it's going to here. I'm saying the bulls are playing with fire. Okay. This is resistance. This is a lot of resistance. Why? Look, that is where they love it the most. Bulls and bears love it the most. So if it goes up, it's going to hit a wall of resistance. Buy, sell, buy, sell, buy, sell. So you cannot afford to lose this. So first, level. Second is trend. They have a higher low trend, had one going, and they're losing it. So level and who's in control. Careful. Zoom, somebody said. You know, that company scares me. So we're zooming right now, right?
A couple of questions about whether this webinar is recorded or not. Yes, and it will be sent to everyone who registered. It should be in your inbox within about an hour of the webinar ending. So yeah, you'll have access to this recorded webinar because there's so many concepts that Nick flies through that I would recommend that you definitely go back and watch it for concepts, especially the people who are brand new to options. In the first 10, 20, 30 minutes, there's a lot to cover. How do we sign up for trade alerts? I'm going to send a link again in the chat. And I'll stick around after the webinar just to answer questions as well. I'll prop the link in the chat. So basically, it's going to take you to a checkout with 30% off discount for all the webinar attendees. The first checkout is for starter. Each of the subscriptions are stacking. So the starter comes with 2 trades per month. Once you purchase that, the next step will ask you if you want to add an additional 4 trades per month, and that's the enhanced version. So I think the total comes to about $275 per year if you want 6 trades per month. And that's what I recommend if you want a little bit more consistency with a bit more volume. If you're new and you just want to kind of dip your toes to start, then I would say the starter gives you the 2 trades per month, and that comes to about $67.90 per year, which is honestly, it's super cheap compared to other products like this out in the market. So the link's there in the chat. Once I send the recording too, I'll put the link for the checkout with the email with the recording, so that way you have it on hand. Typically we hold this price for today only. I'm gonna see if we can elongate it a little bit more. Maybe I can just say, hey, it's the first week of May, and we can give everyone a little bit of a break. But typically we only keep it for a day, but I'll see if I can extend it. Ultimate price, I gotta check. I think, Nick, how many trades? It's 3 to 9 per week, the ultimate trades?
The ultimates get 3, but depends if they belong to other ones. So there are definitely 3. And more importantly, the weekly recap video, which is, in my opinion, is a saving grace for me. Because
so if you have starter, enhanced, ultimate, you're getting about 18 trade ideas per month. Plus you're going to get weekly recap and preview videos from Nick, and these are
only for the ultimates.
Only for the ultimate. The ultimate price comes to $450, $420 per year, which is still compared to other options courses and services out there, that's cheap. There's options.
But consider this. I don't know if I said it already. It's not a trade alert. The value of it is like a learning experience, because every video I make, I go through the same things I did today. I go through how to place the trade, what it means to sell a put. Somebody has asked earlier, and I'm sorry, I forgot. They said, show me how to do that when to sell a put. So I'm sorry about that. I'm going to go through it right now while Harvey finishes talking.
Yeah. What was I going to finish off? I lost my train of thought, to be honest.
Sorry
Maybe
about that.
You can go. No, it's okay. You go ahead, and I'll remember once.
Okay. So it was. So how does that work when I say, okay, I'm selling a put? So when I sell something in options, I'm creating risk because I'm the quote market maker. So if I sell one put right now, and the order will be to sell it at 500. And if it's a credit into my account, credit I receive, no money leaves my account. They will lock up a cash to reserve the incident that maybe I need to buy the shares. So, but I don't borrow anything from anyone. It's cash secured out of my own account. So this cash goes into my account today. $2,300 will go into my account today at 500. And so somebody has me on the hook that they can give me their shares at $500 at any point in time. By the way, price does not need to be lower than 500 like most people believe. It does not need to be there. They can do it at any point in time. I would love them to do it right now. Give me $200 in profits right away. So, but that never happens. And credit goes into my account. And that position is open. And that position will show profits and red and losses, depends on the price action. But I don't worry about it, because if my intention were to actually buy the shares, then I'll sit on it. It'll show 1,000% loss at one point, and I don't care, because it's unrealized loss, paper loss. So what happens is, one day if it falls below 500, somebody may decide, you know what, I'm going to give him his shares because he said he was going to buy them. I wake up and there are shares in my account, and that position that had a huge loss would disappear. Poof. Why is there a loss? Because I collected 23, but if price falls, it should be like 40. Right? So, or 50 or 80 or 100. So therein lies the huge paper losses. But if my intention was really to buy shares, I shouldn't sweat it, because the worst that can happen is me start to lose money at 475. Why? Because I collected 23. So yeah, they're going to stick me with 23, but I've got $23 to play with. So that's how I go through it. I never sell a naked put that I don't want to buy. How about that? Okay, so that is not a way to trade if I cannot buy it, because that's how people break accounts. That's why I was hesitant to say that. I think I forgot the guy's name, but
yeah, the one thing I remember what I was going to say. So Nick's right. This is a learn while you earn service. There is a trade idea that gives you the exact trade that Nick is giving, but it's more than that. It's the education behind it. It's the chart that you're going to get with it, the table that he's going to give you. But this does get emailed to you in your inbox, or we also have an SMS ability to alert you. So you could be going on your day and you can get an alert, a text alert saying, here's the next trade idea that I have. It's Tesla, and here's the setup. And then you can sign into the Premium Ideas website. You can watch the video. You can learn the thought process behind why Nick picked that trade idea. So it's the best of both worlds. You're getting trade ideas, but you're actually going to get the reasoning behind it, and that's where the value is. The ultimate price. So basically, it's a stacking subscription. So first you have to go through the starter, then you have a choice of adding on 4 additional trades for enhanced, and then
somebody's
you have
upset.
yeah, and then you have the ability to add on 3 more per week.
Hey, Brett, chillax, man. I already did skills. You can see it, but here it is. No need to cuss. Jeez. All right, skills. Lower highs, banging against some support. You have some higher lows, lower highs. They're going to come to blows soon. There's no reason to sell it at this point. Depends on personal preference. But if you haven't sold from up here, it's probably too late to do it down here. If I have profits from down here, I book them and rebuy. If it goes above 21.8, it's going to break out. So that's the answer to that. Brett was not having it. Okay, so as far as buying and selling, so here's a bearish bet that I said, if somebody needs to bring balance into their portfolio, they can buy a simple debit put spread in the SPY, and this was it. So 412, 402, 411, 401. So you buy a put and you sell a put below it, and you pay a price up front, and if the market's correct, then you have greens to offset losses anywhere else. It wasn't a reason to short the market. So I said I can do that, or I can go out and sell a call spread, a bear call spread. So the put spread that somebody bought is losing money. The call spread that somebody sold is okay. It's losing a little bit of money, but those are ways to hedge, bring balance. Somebody earlier I thought was asking about balance. So options allow you to hedge a whole portfolio with one position. So if I have a whole bunch of tech, I can use the QQQ to hedge by shorting the QQQ, by simply buying puts or put spreads. So if I buy a put, I lose fast, and the insurance loses its luster right away. But if I time it right, it gives me a lot of protection. Versus taking a mild approach like this one, put spread gives me protection, not as quick, but also doesn't lose as quick. Back ratio, that's too complicated for here. ARK, so one thing you have to realize about ARK, so it's an ETF, right? So the ETF part of it means you have to do homework. So if you're long Tesla and you're long ARK, you're really long Tesla twice, because ARK has 11% of ARK K is Tesla. And so I was long ARK at one point, and I closed it because I went long Tesla, and then I was long NEO. So I was like way too long the same thing. Luckily, they all worked out. So ARK K on dips, when everybody hates it and is making fun of it, this is when you go long it. I don't know ASO, so I don't remember that I know it. Let me see. Yeah, I don't have anything about it. So I don't know what that is. Up here, it's in a consolidation zone. I have no reason there's no trigger. It's stuck. And if it gets unstuck, it's going to come down to here because there are 2 points of contention and not much going on in between them. So weird. There's like a void down here. I don't think they should get out of here before they resolve that. Boy, that's a lot of emojis. APXT, whatever the hell that is. Palantir, I like it. Stay long it long term. Oh my gosh. Baidu was weird. There's so much going on with Baidu that I don't understand, but here are the comments on the chart. It's in the box. Chase the edges of the box. F-Cell. Amazon, I already put the chart up. F-Cell. So if F-Cell holds 8, it's fine. So see what it does versus 11 versus 8. 12 versus 8. I think it's going to see a lot of sellers going into 12. I don't know much about it. eBay took a dip it's a viable dip. Shopify, SPG, I mean, SPG, how are they making money? I don't understand. That's Simon Property Group, right? So I'd be aware of SPG. They have a lawsuit, don't they? They had a buyout that they're trying to back out of. I'm not sure. So this is what is a Shopify. So it's a buy the dip and fade, chase it above 1300. The problem is with options, you can't do single legs. And that's one of the ones I don't trade with spreads because it's impossible to get a good quote. So that's not a stock I trade, even though it would be beautiful. CCL, Carnival, right? Yeah. So it's stuck in the middle. It's got a good consolidation zone, so I don't think they should freak out. Any dips into 25 should be viable for a swing back up and attacking the necklines above. Xpeng and Mara. So two people, more than one person asked for Mara. Here are the comments. I was long, I closed it. It should see resistance. I will get long on the next dip. And if it does lose this one, that's a huge head and shoulders that could come down to 17. But that's the long scenario, that the low odds scenario. But technically, it's there. So it would take a crash, I guess, in Bitcoin for that to happen. Apple, we've covered. It's boring as heck. Apple needs a new CEO. What did he just say? Yes, they could have had nobody in that CEO seat and done just as well, even better. Right now, it has $130 billion in debt. What is this? AT&T. There's no reason to own this company, in my opinion, except for 6% yield. So it's a good way to earn 6% if you're okay owning the shares a little bit up, a little bit down. KO, Riot. Riot is a riot. Do I trade Bitcoin and Dogecoin? I don't, but I do cover them. What am I? Riot. So I did trade Bitcoin indirectly through other stocks, but not the coin itself. Probably I would do the futures if I were to act on Bitcoin. Okay, these are the comments. They are valid on Riot. Has support, has resistance. Stuck. BAC, I would short it here if you force me to do anything. BlackBerry is useless right now to try to trade it. TTCF, I hear good things. That's the tattooed chef, but the price action is not so good, right? My best friend, my childhood friend, I've known him since we were 3 years old, back in Beirut, roaming the streets of Beirut during the war. So it has good support through 1550. But God help them if they lose it. Okay, so it's a buyable dip with a tight stop if it falls there. Right now, they have sellers into 19. So if you know something about the company you want to bet upside, that's fine. But it is expensive. It's not cheap. Okay, so W key, what is that, whiskey or something? Y key. Y ski is falling into support. It should not lose. It cannot lose 8.25. If it does, question mark. Okay, versus 11. Sellers at 11 and above. Actually, sellers at 10.5 and above. Buyers must show up. If they lose that last bounce, question mark. So I don't know what VFF is. Village Farms. Is this like a farm to table thing? Same concept as this last one. Lose 10.8, 10.28, or 10, whatever that bounce is, then you're opening yourself up for a big drop. I don't want to say the number because it upsets people, but if I'm long, I would stop out just in case. Sellers into 1260. Don't chase it into 1260. Workhorse, I already commented on that earlier. So I have no reason to own it other than hope. And if you have hope, fine. Me, no. 14 or sellers, and it's the trigger. If they take 14 out, they have a chance. They have a big sellers at 15 and above. So the onus is on the bulls to take this thing by the horns. One order causes all this debacle. I don't care how big of an order. If it's a real business pipeline, the company should come out and say, screw it, we lost a big deal. Instead, they're crying and trying to fight to get it back. I don't know about the hummus, but you can make it. Open the cans of garbanzos, 1 tablespoon with less than a tablespoon of tahini, a little salt, and just grind them in the boat motor thing. And you're good to go. Your own hummus. Put some olive oil on it. You're good. Paprika. Rig. AMD, please. So AMD, okay. I was long. I booked it on this rally. Okay. So my concern with AMD is that this consolidation zone is super good, but the base of it is super frothy. So there's a total scenario I can see it coming down to the low 60s, in which I would jump with both hands or feet, I should say. It's not going there alone. So if the market's correct, they will try to hold 78. They will try to hold 73. And if both fail, then they will go in for a ride. Just because of this stupid earnings rally back there. Great action. I got long early and got out into this, and I have not reloaded. I believe I did an NDM, but I can't remember if it was earlier today or what. But here is an NDM. Comments are valid. I just did them today. You. All right, Eli. Boom. Instant information for Eli. Look at this. Any airline stocks? Not right here. I wouldn't do airlines right here. LAC Habibi. Okay. Just because you are so loving. Lower highs, floorboard battle. So the battle at the floorboard makes sense. If you look left, that was the base. So I expect, if I was a betting person, that this should hold, and eventually they will break out of this descending lower high trend. If I'm long, this is not where I get out. I would stop out if they break through the base, because that's my assumption. Oh no, everybody's using Habibi now. It wore off. I'm a married guy. No, VXRT. Vaxart? Yeah, this is not an obvious point of entry for me. Although I don't want to stop you from being long it because of this. So I would not want to be the guy. I'm okay seeing this happening without me, but I don't want to. It's if I'm starting long right here, it's not for me. I did OCGN. I'm not going to do it again. Neo with covered options. Yes, absolutely. I did you. What are you talking? No commentary. It was on the charts. Read it. It's right there. Resistance, support. Somewhere in the middle lies the truth. And one support below here. There's nothing to say. It's stuck in the consolidation zone. There's no reason to add. If you own it, great. A breakout above here, maybe it takes some acceleration. But it has good base. There's no reason to add or get out. Nokia.
The chats, they're hungry for knowledge. I've never seen so many tickers. Probably out of all the webinars we've done, I've never seen this many tickers continue to keep popping up. So,
geez, Louise. Phew. I'm glad I've got Mountain Dew next to me. Oh my God. And it's okay. So this, you can't pay me to be long that. I know nothing about it. That's the old Playboy. It's in the hands of the buyer, so you can't short it. If you're in it, make sure you lock some profits. Okta, so BA, I'm long BA long term. It's going to 300 plus. Okta, the comments are on the chart. Let me zoom out a little bit. So great upside potential if it breaks out from here. Great upside. By that I mean like whoosh up. But look at all the frothy candles. So it does have supports from levels, but be careful. This guy moves fast. Mountain Dew, yep. IDEX, okay, so IDEX has seen a lot of concept. So it's a sell into 316, but chase it if it breaks out. So whenever I see sharp failure like this, that's the place that shorts get against, but then they stop out immediately. So a breakout above this and close above that takes it, right? It's going to have resistance here and a cluster of resistance up there. So I don't like the trend. Logic says it's going to fade again. So it's the battle between how far do you fade and come back. J&J, yawn. That's my comment. Why? Okay, let's see why. No, I was thinking about a different company then. Never mind, I take it back. Sorry, J&J. J&J, not an entry point for me. This is a weekly chart. From a concept, it's just too high for me. It's a good company. Probably one of the oldest in America, pays decent dividend. No reason to short it all by its own. If it falls into 156, I'm a buyer. Up here, I'm not. Okay. BNT. Whoa. Anytime you come to me with a chart that looks like that, the answer is not for me. Casper. Wait, there's the sleep company and something else. What Casper do you need? You got to tell me. If it's a sleep company, it's stuck in the middle, faded into 9, buy it into 6. STR. That's a Bitcoin company, right? No. Okay. So stuck in a tight range. Resistance above, support below. No reason to get out. Selling put spreads might work. PayPal, I like. PayPal. PayPal, I like. I'm long Square, so I'm not going to be long PayPal as well. They're fintech. Buy the dip in these guys. Whenever they fall hard, it's time to sell puts and put spreads into them. So if it falls into 245, 248, I think there will be like support levels above it. So any drop into 256 or lower is catchable. Any breakout from 276, in fact, I'm going to do it right now, is we'll go to 300. Potentially 300 with a question mark. So break above here, that's an actionable trade. Look, a rally, consolidation, boom. But it needs to trigger. So buy the dip. If it this is where I say BDBR. Buy the dip or buy the rip. See, okay, see, fine. We started with about 1,000 people in the room. So if I don't get to your ticker, it feels like forever, but there are literally 1,000 tickers going through. So
yeah, what was supposed to be, I think we had the questions at the start, will this be an hour long? And every single time we've done this, it's just, there's just so much enthusiasm and so many questions that it just makes sense for us to keep going. And
yeah, so this is falling into support, right? So this is not a reason to jump on it, because look, support can be much lower, but I don't know what's going on with this. What is this? But it better not lose this, because then it's a mother of all head and shoulders. But yeah, it's an improbable scenario. I don't know. Clover, I already commented on. I wouldn't short it. I would ignore the stupid. So the report on Clover is that disclosure. They didn't disclose this and they didn't disclose that. Well, even if that's right, it doesn't break the business. It's a fine and they move on. It's a good business. So I'm not a fan of Chamath Palihapitiya, but it's a business. I mean, it's a legitimate business. What am I looking at? Tilray. Okay, so there's a big problem with Tilray. It's in a base, okay, but there's this merger with APHA. I don't know what happened after hours or anything, if anything, but it's a fluid scenario. So the merger was like X shares of this and X shares of that. This one takes the convoluted way. Why ruin it? So the business is okay. It's not great. They need to be legalized on the federal level. So somebody that believes in it long term, I can't discount that. From a trading perspective, I'd rather see it lower. It's into resistance. Disney, USAK. What is that? I've never heard of it. Oh, okay. All this for that excitement. Okay, so I think it's got a lot of resistance going into 16 and 17. I have no trigger. So if you want a mini trigger, is if you break Friday's or Thursday's high, and then you're immediately going to face a lot of sellers. I think the scandal speaks volume. 17.2. I think it's a big, tall order. If it loses 14, it might take a ride down to 12. That's not my scenario. I'm just saying it could. So there's a good pivot zone. This candle is important. So so if I was you, I would take a box around this candle. That's an important candle. And then extend it a little bit to cover this big debacle here. So this is your box. Pfizer, that's the one that's a yawner, right? Let me see. Okay. Pfizer was here in 1998. Need I say more? I did TTCF, Hassan. Go back and watch it. It was here. Look how many dojis in 1998, or this is 2001. What's a doji? It's indecision. And these are monthly candles. Actually, a quarter candle. Oh my God. Okay, so for 3 months, they couldn't decide on price and they stuck with 38. 9 months. You can say a whole year. Each one of these is 3 months. So 3 months, they don't know. They go up, they go down, they come back. They go up, they go down, they come back. Same. They come back at the same level they are now. Long wicks, but this is a 3 months wick. So they had 3 months. So within it, they had, no wicks, but I did CRISPR, I think already. BNS, or maybe BNS. BNS is not an entry opportunity for me here. Maybe above current levels, but if I'm not long, I'm hoping for the best. A breakout, chase it, but I'm not a buyer. I want to see them take this out. But kudos if you're long. CRM, okay, I do like it. I said get long a couple of times. One failed, the other one failed in the beginning, but it was ridiculous what they sold it for. The reason they sold it for was absolutely ridiculous. So here are my comments. Tight range, chase okay, this one played out, so I can move it. This one, take it out, visual noise. Support that still stands, actually here. Yeah, it's a tight zone. It has a lot of support below. I would buy the dip into 210. Okay, so we got to put a time limit on this one, otherwise I'll be here all day.
So let's any questions in regards to the newsletter Startup Enhanced Ultimate? I can answer those questions. Again, like as a subscriber to Benzinga Options, we have a support team that can funnel questions over to Nick. So if at any point in time you have questions regarding a trade idea that he sent, or you want feedback on something, typically if we get a lot of people asking the same question, Nick will create a video to tackle that and answer it for you. So that's kind of another value add to the Benzinga service. So do I have to subscribe at the entry level first? Jose, yes. So the way it works is it's a stacking subscription. You first have to get the starter, and then you're able to get the additional trades, 4 per week, and then 3 per week. So you can get 2 to start per month, or you can get 6 per month, or if you really want, you can go up to 18 per month with a weekly video giving you a preview and a recap. Send a sample newsletter and video. It's a 14-day free trial, so technically you can go in, take a look at everything, and if you're not happy in 14 days, you can cancel, get your money back. That's probably a full. You can even make a trade that he sends this week. Does your trade ideas help day trading, Nick? Do you want to answer that one?
Say what?
Does your trade ideas help day trading?
Well, are you a day trader? Because people use that term loosely. A day trader has to liquidate all their positions every day. If you trade daily, you're not necessarily a day trader. So tricky. I mean, I don't know how to answer that. I don't submit my trades to be day traders. I want my trades to be swings.
How much? So from the stats that Nick's given me in terms of like a win rate, and
I can answer that. So given the fact that I share 4 different ways of taking a trade most often: buying a call spread, selling a put spread. Selling parts are 90% win ratio or more. I don't want to quote more because it sounds fake, but I designed them boring, and the only way they get blown out is if something extravagant happens. On the upside, I can tell you with confidence that more than 80% of them have had 12 to 18% opportunity to book. So if somebody books at 15% all the time, they have had more than 80% win ratio on upsides too. But if somebody that wants to ride and squeeze every penny out of every trade, they probably rode it up and then rode it back down. So on the buying part.
Yeah. So the 6 trades, typically what Nick does is he sends one that's this is typically, sometimes it changes, but one trade, if he gives you a trade idea, one is buying a call setup, and then the second one is typically a credit put spread setup. So you can kind of mix and match depending on what you feel.
The table looks like this. The table actually will show 4 of them. So the write-up may not reflect 4, but the information is for 4. So debit call spreads, credit puts, or credit put spreads. And these are not the only 4. There are hundreds of ways people can do this at 100 different levels. These are my choices based on conservative. So I aim to start with a high hit ratio. The lower the number here, the higher my odds when I'm selling. And that's what I aim for. And on the way up, I don't want to guess. I stay close to current price. So on the buying side, you'll see a high delta, but that doesn't matter. On the selling side, it matters more because I want to sell risk outside of the range of reach. So to use this one as an example, this one had a $6 profit at one point. If somebody didn't book it, I question what are they trying to get, because now they're down $1 and change versus being up. Like 3 days after this issues, 4 days after this issued, it was worth $19. And if they didn't book it, that's $600 on $1,300 in 4 days. What else do you need? If you're new to options, can you follow? If you're new to options and you want to learn about options, this is your cheapest school, my friend. So yes, you can follow, Neo, and you don't have to take the trade. Trust me. So if you go to school, you're going to pay thousands of dollars to be in school. This comes to you in your email, and you watch the video. You'll go through everything I just did on the video, and you'll look at the table, and you look at the trade. You take it down on paper. You practice with paper trading, and then you see how well you do. and you learn the lingo. It's always the same, repetitive on the technicals, on everything. So
All the registrations for the Zoom, they will get the recording of the webinar, along with the link to the 30% off discount. Again, typically it's only 1 day long. I'm going to see if I can extend it. There is a 14-day free trial, no risk at all. You get your money back if you're not happy with the service in 14 days.
so yeah. So somebody's asking about indicators. Don't complicate things. VWAP is good, but know how to use it. Whatever you use, make sure you specialize in it. Look, I have nothing. I only have volume profile. That's it. And it's not a trigger for me. The only trigger is really eyeballs and levels. I do hundreds of hours worth of homework. You saw how many charts I pulled up. They already have lines on them. Every orange line is an email in my inbox. I literally have like 24 every week.
One question was, do you send an alert when to get out? No, but because, and Nick, you can go into the details of why you don't, but there is a video. Once you become a subscriber, there's a getting started page, and that comes with a bunch of educational videos for basically definitions, a trade setup. There is a video in there. It's like an educational library that tells you when to book profits. And that's a pretty thorough video that Nick has created.
And if you see a video that's not there, if you say, I wish there was a video like this, and you go back to the team and say, I wish we had a video that shows that, and it's my expertise, I'll provide it. I mean, my goal is to have you in there as long as possible, right? So you want it, we'll make it happen.
Yeah.
Okay, so somebody asked something. What was it? Buy the dip or buy the rip. It's easy. So what was the ticker? Z. Okay, so I guess I can explain it here, maybe. So if I'm here and there's nothing to do, right? The stock is in the middle of a range. There's a trigger if they go above that one. So I would chase it if they go above prior failure. When they break through prior failure, that means the bears might be tired. The bulls could overwhelm them, right? Whatever the stock is, Illumina. So I can't do anything here. I could buy and hope, but that's not me. So I would buy the trigger. So buy the rip or buy the dip. What does that mean? If it falls into here, it's falling into support. So I can assume that it's going to hold again. So I can buy it in anticipation of it stabilizing and come back. And this way I get to swing it up back to the rip area and not even wait for it. So I'd either buy the rip or wait for it to dip and buy it. That's what buy the dip, buy the rip means. That's my own term. I made it up.
I get a t-shirt for that. There is also, okay, just for everyone, once you're a member, we do have a support team. So any questions at all during your subscription in terms of whether it's administrative or questions for Nick, you can send an email to newsletters@benzinga.com. I'll put that in the chat, newsletters@benzinga.com. We also have a phone line, so you can actually talk to someone, which is kind of rare these days. A lot of these companies, they don't even have a phone number available for you to call, but we're the opposite. There is a phone number. If you need to talk to someone about your account, about your subscriptions, you can chat with someone. I think that the line's typically during business hours. How do you determine the range? Okay, so we'll keep the stream going just with the links, just so people have access to the links. If there's any questions in regards to the newsletters, the different tiers, I can stick around and answer those. But we're almost over 2 hours after. So anyways, I think we got to say thanks to everyone that's sticking around. We still have almost 900 people watching this stream 2 hours into it. So I think everyone here can get a pulse of how much Nick cares about his subscribers and the product he's giving, because he's not just after an hour saying, okay, I got to go, take care, guys. He's sticking around. He's answering your ticker questions. That just shows you the kind of guy Nick is, and that he's going to give you the trades that only he makes himself. I don't think we can give Nick's cell number. Just replay. Yes, everyone who's registered will get the webinar recording. so you can watch this over and over again. If you want to talk to Nick, you can just hear his voice on the webinar. Best time to closing positions. I talked about that. There's a video. Once you're a member, there's a video specifically for when to book profits, because it depends on your situation. Thumbs up. Thank you guys for all the kind words. I want to say thank you to you guys. Like Sunday afternoon, we're getting a bunch of people who really care about leveling up their trading skills, and that's why we're here. We're here for you guys. So thank
Somebody
you.
wants me to go have some alcohol.
One of the best webinars. Maybe alcohol with Rice Krispie squares. I think that's a good combination for today.
Rice Krispies.
All right, I'll drop the link again. We're gonna keep the stream running for a little bit just in case people want to get access to this link. If you have any other questions, even afterward, what is the phone number? There is a phone number. When you click on the link there on the checkout at the very top, there is an email address, newsletter@benzinga.com, plus there's a phone number. I think if you call today, because it's Sunday, it might go to voicemail, but someone will call you back. If you send an email, they're pretty quick. So newsletters@benzinga.com for any questions. Rodrigo is in the YouTube chat, so if anyone's got YouTube questions, Rodrigo's our boy. He'll help you out. Do you have to buy starting level? Yes. So the way it works, I'm gonna mess up your name, Josu. I think it's Josu. It starts with the starter pack, which is 2 trades per month. Then you can get access to the additional trades, so you can get an additional 4 per month with enhanced. And then if you want to go to the highest tier, and these are for people who really want to take options trading to a really high level where they want to start, taking this kind of like into a full-time thing, that's where the ultimate comes in. And that's 3 trades per week plus a weekly video recap. So if you want to start simple, you can get 2 trades per month, or you can go 6 trades per month with starter plus enhanced. And that's what I recommend you start with, because you're going to get good volume. And then ultimate, you get 18 trades per month. So that's taking to the next level after that. Great seminar. It's really nice to see that a lot of people are saying this is the best webinar they've ever been to. And I know in financial media, there's lots of webinars out there, so that means a lot to us. We're here for you. What platform do we use to trade from? Nick, I think you use E-Trade, right?
I use E-Trade and Thinkorswim.
Hands down the best. Josu Sway. Okay, absolutely the best. Any other questions, guys? I can stick around here. Canada's still in lockdown. I have nowhere to go, so this is my fun for the day.
Okay, I'm gonna give one last chart, and then we'll call it a day. How about that? So I don't know this company, Schrodinger. I think I've heard of the name. So tremendous selling up here, and some good strong buying. So the battle is getting tighter, and they're going to get tired of it, do this or do that. So I would buy it down here if it falls back to down here, or chase once they finally break through all these resistance lines. So I guess if I'm long, I don't have reason to get out. It's a better long than short at this point. Uber. There you go, Uber. Comments on the chart. I do like the company. I would be more likely to buy it down here than sell it.
So Jinto is asking 2 or 6 trades. So each trade comes with, we've answered this before. In the table, he actually gives you 4 different setups, but we write down 2. One's a call, one's a credit put spread. So technically, you're getting like 4 setups and 12 setups. Monthly, it's an annual payment of $67.90 with a 30% discount if you're on the starter. And think about it this way, that comes down to $5.60 per month. That's less than your Spotify, less than your Netflix, less than your Disney Plus, less than, I don't know what else you're paying for, but for $5.60, you're going to get, an opportunity to make some money. Who wouldn't take that? You also get an SMS alert, not just an email. And there is a website where all the postings are there for you. So as soon as you purchase and pay, you're going to get access to all the historical trades that Nick has made. If you hit the enhanced one, you're going to see the trades from yesterday or last week too. So if we start, can we later? Yes, you can start with starter and get the enhanced at a later date. No problem. It's up to you. 18. How much? I don't know the exact price offhand, Neo, but if you go through the checkout, it'll add on. I think starter plus enhanced comes to about 275 per year, and then if you want to add the ultimate, I think it's another like 400 or 500. But you can take it as you go, like however you want to start, whether you want to dip your toes or you want to go in the pool full out. That's your decision. But everyone gets the 14-day refund, so there's no risk truly. Any last minute questions here, admin wise, service wise, subscription wise? I will keep the stream running. Do you update your recommendations if they change? 30% is the 30%. 30% is for all three. So you're getting 30% off all three. We're not going to do any more tickers. You can, next time I think we do this maybe in a month or so. There's just so many people. Is the subscriptions for only Nixters? Yes, this is for the options newsletter. We have other exit alerts. No exit alerts, but there's a video that teaches you when you should exit based off of your account.
Also, my video, when I share the trade, I would usually say if there's a level that will get me out. So if it loses X on the chart, I'm out. That would be one trade alert exit that you should note of it, or set a percent. If you see 20% red, I'm out, or $500 red, I'm out. Everybody's different, but if there's a reason to get out because of a level, I'll mention it.
Yeah, frequency, 2 trades are per month. So one's on the first day of the month, and the second one is typically the 15th of each month. Okay, perfect. We'll keep the stream running for about 5-10 minutes. I'll put the link in there again. Thank you, everybody. Matt's doing work for me. Thank you, Matt. That's super kind. Thank you, everyone, for joining. Let's thank Nick for taking almost 2.5 hours out of his day answering a lot of your questions. It just shows how much he cares about you guys. Thank you again, and happy trading.
All right. And I'm going to sign out, right?
Yep. Well, you can sign out. I'm just going to keep the stream running for a little bit, just
Okay.
so
Cool.
everyone has the link.
Thanks, guys and gals, for the questions and the heat. Later. I think my thing is locked up. I can't touch anything on Zoom.
Yeah, I think because we have so many chat messages.
I know, like I can't touch chat, so I'm gonna have to kill it.
We maximize
Control
servers, guys.
I'm gonna have to Control Alt Delete. All right, sorry, I'm gonna be rude about it. Later. See you. Hopefully you join, and it's a lot of fun in there, especially if you get up into the ultimate section and maybe eventually in the chat room.
Yeah, I'll just answer questions by voice since the chat's freezing on me. How do I sign up for 18? You got to go through the checkout on starter. Once you do, it's going to ask you to add 4 more, and then once you add that, it'll ask you to add 3 more per week. So that's how you have to go through it. 67.90 for the starter if you just want to start with 2 per month. Do you get trades on certain day of the week? Typically, the ultimate ones, if you're going to the highest tier, you get them. I think it's Tuesday, Wednesday, Friday. It doesn't really have a consistent manner to it. It just depends whenever Nick finds a trade. If you're on starter, we typically send the trade out on the 1st of the month and the 15th, but it does vary from time to time, so that's not set in stone. The enhanced, if you hit the starter plus enhanced, then you would definitely get a trade every Monday as well. You can upgrade later. I cannot confirm if there will be a discount at that point in time. It all depends on what's happening during, just like how any other store or whatever does a discount, just kind of random. So I would just say join in now. If you're not happy, then you can refund your, and then that way you're getting the discount in. Starter is 67.90. Correct, CJ. All right, I'll drop the link one more time in the Zoom and in the YouTube. If you have any questions after this, then you can email newsletters@benzinga.com. And someone from our support team would be happy to help you. We also do have a phone number if you want to talk to someone. Let me just send this one back. There we go. And yep, so I'm going to add the email newsletters@benzinga.com for further questions. And we'll be happy to help you out. Thank you guys for attending. I'm going to close the stream off now. Really appreciate everyone sticking around even through these last couple minutes answering questions. Have a good day, everyone.